Ripple has spent approximately $2.45 billion on acquisitions in just the last 7 months of 2025, and if you're not paying close attention right now, you're completely missing what's being built behind the scenes. This is not about short-term price action. This is not about daily charts or market noise. What Ripple is constructing is a full-scale financial infrastructure platform, and historically, the only companies that have executed strategies like this are firms such as Google, Amazon, and Microsoft. By the end of this video, you'll understand exactly why Ripple is positioning itself to control major parts of the global financial system, how these acquisitions fit together, and why this matters enormously for XRP holders moving forward. To really understand what's happening today, you need to zoom out. Ripple's strategy did not start in 2025, and it didn't even start after the lawsuit. This has been a decade-long plan that began shortly after Ripple was founded in 2012. From day one, Ripple focused on solving the hardest problems in finance: cross-border payments, liquidity fragmentation, settlement delays, custody, and regulatory compliance. These are not retail problems. These are institutional problems, and institutions move the most capital in the world. For years, Ripple quietly built relationships with banks, regulators, and financial institutions while simultaneously investing in infrastructure that most retail investors never noticed. The lawsuit slowed things down publicly, but internally, Ripple continued to prepare for this exact moment. Once legal clarity was achieved, the company moved aggressively, accelerating acquisitions that allowed it to fill every remaining gap in its ecosystem. Ripple's most recent funding activity gives you an idea of how serious this is. In its latest round, which included investments from firms like Citadel and Fortress, Ripple was valued at roughly $40 billion, with shares priced at $250. That valuation matched the tender offer price earlier in the year, signaling strong institutional confidence. This valuation wasn't based on speculation. It reflected years of infrastructure development and long-term strategic positioning. Going back several years, Ripple made early acquisitions that laid the groundwork for everything we're seeing now. In 2019, Ripple acquired Logos, an Iceland-based development firm specializing in non-custodial wallet technology. This gave Ripple direct access to secure, user-controlled digital asset storage, something that would later become essential for institutional custody solutions. In 2021, Ripple followed up with the acquisition of Algrim, another Icelandic company focused on cryptocurrency custody. This added another layer of security and operational depth to Ripple's custody stack. The real turning point came in 2023, with Ripple's acquisition of Metaco for $250 million, which at the time was Ripple's largest acquisition ever. Metaco was a Swiss-based digital asset custody and tokenization firm, already working with major global financial institutions. This deal instantly gave Ripple enterprise-grade custody infrastructure and access to institutional relationships that would have taken years to build organically. It also positioned Ripple to compete directly with firms like Fireblocks and Copper, placing it firmly in the top tier of digital asset custody providers. Then in 2024, Ripple made another critical move by acquiring Standard Custody, a New York-based digital asset platform with a trust charter regulated by the New York Department of Financial Services. This acquisition was about regulation and legitimacy. It gave Ripple a BIT license, a regulated trust entity in the United States, and a clear regulatory foothold in one of the most important financial jurisdictions in the world. It also brought in key leadership, including Jack McDonald, who now oversees Ripple's global stablecoin initiatives. With this move, Ripple positioned itself to pursue a full banking charter and operate at a level very few crypto companies ever reach. By the time 2025 began, Ripple had quietly assembled nearly every foundational component needed to offer institutions a fully integrated, end-to-end financial solution. Custody, compliance, settlement, payments, liquidity, and regulatory approval were all either built or within reach. What followed next was one of the most aggressive expansion phases in crypto history. In 2025 alone, Ripple executed a series of acquisitions that most people treated as isolated events, but in reality, they form a single, unified strategy. The most significant of these was the acquisition of Hidden Road in April for $1.25 billion. Hidden Road is a prime brokerage firm, now rebranded as Ripple Prime, and this deal stands as one of the largest acquisitions ever in the digital asset space. Most retail investors have never heard of prime brokers, but in institutional finance, prime brokers are essential. They are the backbone of institutional trading. Prime brokers handle trade clearing and settlement, custody of assets, financing through margin and credit lines, and complex multi-asset strategies across equities, fixed income, derivatives, foreign exchange, and digital assets. Without a prime broker, large institutions cannot operate efficiently. Hidden Road already operated at the highest institutional level. It serviced over 300 institutional clients, including major hedge funds and trading firms, and processed more than $3 trillion in clearing volume in 2024 alone. Founded by Mark Ashe, formerly of Steve Cohen's trading firm, Hidden Road competed directly with Coinbase Prime and FallConnex, but with deeper integration across traditional and digital markets. For Ripple, this acquisition was transformational. It instantly gave Ripple credibility with hedge funds and institutional investors. It provided the infrastructure needed to custody, clear, and finance digital assets at scale. Most importantly, it created a direct pipeline between Ripple and some of the largest pools of capital in the world. Every institution using Ripple Prime now touches Ripple's ecosystem, whether they realize it or not. Ripple also integrated its own stablecoin into Ripple Prime's operations, using it as collateral across Prime brokerage products. This creates organic institutional demand for Ripple's stablecoin and embeds it directly into daily financial operations. This is not marketing adoption. This is infrastructure-level adoption. Since the acquisition closed, Ripple Prime's business has reportedly grown by more than 3 times. That kind of growth at the institutional level is extraordinary, and it signals strong demand for exactly what Ripple is offering. It also strengthens Ripple's position as it pursues a banking license, something that would be unprecedented for a company operating at this intersection of traditional finance and digital assets. Just a few months later, in August 2025, Ripple acquired Rail for approximately $200 million. Rail is a stablecoin payment infrastructure platform designed to make stablecoin usage seamless for enterprises. This acquisition flew under the radar for many people, but it is one of the most important pieces of Ripple's strategy. Rail enables businesses to transact using stablecoins without actually holding crypto on their balance sheets. It provides virtual accounts, automated back-office operations, intelligent payment routing, and support for multiple currencies and stablecoins. It operates 24 hours a day, 7 days a week, and integrates through a single API, making it extremely easy for enterprises to onboard. Rail is already projected to process more than 10% of global B2B stablecoin payments, representing billions of dollars in annual volume. With regulatory clarity improving and stablecoin adoption accelerating, this positions Ripple at the center of a rapidly expanding market. Instead of companies building their own stablecoin infrastructure, they can simply plug into Ripple's system. Later in 2025, Ripple acquired Treasury for approximately $1 billion. This move added enterprise-grade treasury management capabilities to Ripple's platform. Treasury management is how corporations manage liquidity, risk, and capital allocation across global operations. By integrating treasury services with stablecoin payments and prime brokerage, Ripple created a seamless financial operating system for institutions. Around the same time, Ripple launched Evernorth, a dedicated XRP treasury platform designed to help institutions manage XRP holdings efficiently. Alongside this, Ripple announced Palisade, a wallet and custody infrastructure provider that further strengthened its custody and security stack. These additions allow Ripple to meet institutions wherever they are, filling gaps in existing infrastructure rather than forcing a complete overhaul. When you step back and look at the full picture, it becomes clear what Ripple is building. This is not a collection of random companies. This is a vertically integrated financial infrastructure platform. Custody, payments, treasury, liquidity, settlement, compliance, and stablecoin issuance are all connected under one ecosystem. This is what the Amazon of financial infrastructure looks like. Traditional finance requires custody and clearing, treasury management, global payment rails that operate 24/7, stablecoins for efficient settlement, and neutral bridge assets to move value across systems. Ripple has spent more than a decade assembling every one of these components. XRP sits at the center of this system as a liquidity bridge and settlement asset, while Ripple's stablecoin and treasury services handle operational flows. Significance of this becomes even clearer as we move toward 2026. With regulatory frameworks solidifying and institutions finally ready to adopt digital assets at scale, Ripple is one of the very few companies positioned to offer a complete, compliant, end-to-end solution. Institutions don't want to manage multiple vendors, fragmented systems, and regulatory uncertainty. They want one trusted counterparty. Ripple is positioning itself to be that counterparty. For XRP holders, this is where the story really matters. Infrastructure drives usage. Usage drives liquidity. Liquidity drives long-term value. As institutions adopt Ripple's platform for custody, payments, treasury, and prime brokerage, XRP becomes embedded in the financial plumbing. This is not about hype. This is about utility at scale. Over the next 5 to 10 years, the institutions using Ripple's ecosystem today will likely expand their usage, onboard new clients, and process exponentially larger volumes. Every layer of this system reinforces the others. The deeper Ripple integrates into global finance, the harder it becomes to replace. What Ripple has built over the past decade is finally coming together. The acquisitions of 2025 didn't start this process. They completed it. And as the world transitions into a new era of digital finance, Ripple is positioned not just to participate, but to lead.